I'm Don Singletary. I'm really excited today about the video. I'm going to talk about leverage, and to start off with, I'm going to show you some numbers about Apple stock and compare it to the Micro Emini, the NASDAQ100, and I'll show you some figures about how you can use leverage and how it works. Now, I've put up a chart here that compares the price of Apple stock and that of the Micro Emini NASDAQ100. First, I'll get you orientated to the screen. At the bottom, you see this is the first 4 months, January 20th through almost the end of April in the year 2020. Now, one of the greatest things that jumps out at you from this chart is how well the Apple, the blue trace, correlates with the NASDAQ100 Micro Emini. They go up and down virtually together. Now, when there's a big market crash like we had during these 4 months of calendar 2020, every good investor with any money and worth his salt wants to try and pick the bottom to buy a good stock and ride the market as it soars back up in price. And Apple stock is the most popular stock in the United States portfolios at all. Now, nobody buys at the exact bottom, which would have been right above 220, but let's just say for a good measure that we use the price of $250. At $250 a share, 100 shares would be $25,000, so 50 shares would be half of that, or $12,500. So we buy 50 shares of Apple, $250 a share, for a total of $12,500. Now we can see that after our time period is up about a month, the value of the Apple stock is $279.95. I'll call it $280 just for an even number. And after this time frame of about 1 month, our shares have gone up in value, now valued at $14,000. So after an initial deposit of $12,500, that's a $1,500 profit, and that is about a 12% return in a month. That's a very good trade. Now we're going to compare that with had you invested in NASDAQ100 Micro Emini, just one. The initial margin deposit be $2,062. And as you can see, we would have bought in at about $7,400, and the price went up to around $87.40. That's an increase of 1,340 points. It's $2 a point, so the total profit would be $1,680. That's a return of 81.4%, a rate of return almost 7 times what you would have made on the 50 shares of Apple stock. That's a very highly leveraged trade. Now, this is, after all, the day trading Micro Emini futures channel, yet I've just compared Micro Emini NASDAQ100 to 50 shares of Apple stock. Now, I'm not saying you can't substitute it instead of buying the stock and take advantage of the higher leverage. You can, and thousands of people do that. It's another application of the Micro Eminis, and it's fantastic. But with this high leverage comes high risk, and that leaves you a tremendous responsibility to observe rule number 1, which is do not lose your trading capital. If you got into a bad trade, didn't use the right stop measures to stop the losses, stop the bleeding, so to speak, you could lose all of your money, be out of business, and couldn't trade anymore. Well, I have to tell you, that would make me very sad, but it's going to be a hell of a lot worse for you. So be careful out there. This is risky business sometimes. It was only in May of 2019 the CME, the Chicago Merc Exchange, first introduced the new Micro Emini futures, a game changer for home investors everywhere. My book was the #1 new release back in November in commodities trading on Amazon.com. And don't forget to subscribe to the channel because you'll be notified of new video posts each week the moment they're put up for viewing. Thank you. Now I want to get back to more talk about the highly leveraged Micro Emini contracts. Each one is a weighted composite average. You see, the one I use in my videos on the channel is the NASDAQ100 list. It has Amazon, Alphabet, which you know is Google, also Broadcom, Cisco, eBay, Comcast, Costco, and many other high-tech names that you probably recognize. Each has a nominal value that changes throughout the day. For example, a quote on the NASDAQ100 Micro, it's $2 a point, The quote is 87.40. This means its nominal value is $17,480. Now I'm going to talk to you about a very important number, the amount of good faith money you need in your account on deposit before you can make a trade in a commodity futures transaction. Now, this is called the initial minimum margin requirement. And each futures contract, corn or gold or oil or everything, they have different initial margin requirements because they have different values. And it's computed by an algorithm called SPAN minimum margin. SPAN stands for Standardized Portfolio Analysis. It's an algorithm based on an array of risk factors, including the value of the contract, that nominal value, the volatility, how much the price may or may not change, and of course the time the contract has to go until it expires. That's called SPAN minimum margin requirements. Now, another thing you need to understand about SPAN is the SPAN minimum margin requirement is the minimum amount any broker has to require to allow a customer to trade that contract. Some brokers, and brokers are allowed at their own discretion, to increase the amount above a SPAN minimum margin. For this reason, most traders, including myself, prefer to find a broker who agrees that they will only charge or require the SPAN minimum margin requirements. Now I'm going to go back to try to explain how and why they changed these SPAN minimum margin requirements. I'm going to go back to the chart I used at the first part of this video where we looked at a time frame along the bottom there. You'll see I'm highlighting it in yellow from about January 20th up through the third week of April. This is in calendar 2020. Now, the COVID-19 pandemic news came out towards mid-February, and you can see right here where the market just absolutely crashed and went up and down and became more and more volatile. Well, when the market becomes more volatile, the brokers and the CFTC and the exchanges need more or a higher SPAN minimum margin requirement as determined by that algorithm I spoke of a moment ago. You can see in the first 3 weeks of January, the daily fluctuation of the values didn't really change that much. And then since then, up until the third week of April, they've gone really super volatile. Now, what happened was back here, the initial margin requirement, SPAN minimum margin to trade NASDAQ100 Micro Emini was about $950. By the third week of April, that had gone up to $2,062. It a little bit more than doubled. And this is what they have to do. This maintains enough money on deposit by all the customers to make sure that everybody gets the money that they're due. It's a safety precaution. Now, the new Micro E-minis that began trading in May of 2019, I told you earlier in the video, 32 million of this brand new futures contract traded in the first 90 days. That's record setting. Now, why? Let me show you why. The micros are 1/10 the size of the E-minis. That means to trade an E-mini right now would cost 10 times as much as the initial margin. Instead of $2,062, you'd have to put up $20,620. Well, of course, a lot of home investors and small investors don't have that amount of money allocated to be able to trade this way. So that is why there was this big, huge rush. It truly is a game changer. This is something that never, ever, ever has existed before. Go back a few years and you didn't have internet and a smartphone in your pocket where you could trade virtually 24/7. It's truly a game changer, and I'm glad to be able to help people learn to understand how better to trade these amazing Micro E-mini contracts. I've been trading futures a long time, over 30 years, and it truly is amazing that there is such a product now. Before, you had to be Daddy Warbucks or a fairly well-off or financially well-off person before you could afford to put down $20,000 or $30,000 or more to trade an E-mini contract. And now with these new micro E-minis that are a tenth the size, it's the first time ever home investors have had a legitimate chance to get in and learn to day trade these futures and these great stock indexes that hedge funds and large investors have been using since the 1980s. So it really is something new, and I think it is a game changer. If you read my book or seen my videos, you know how excited I am about it. And it pleases me to be able to offer my book where you can have everything you need for the basic A to Z stuff in one place so you can learn faster and easier. So look for the link to my book below. I would appreciate that. I also have ties to a couple of playlists below. If you're new to the channel, look for beginners and MACD winners to get yourself off to a good start and learn some of the basics. Oh, and one more thing before I go. If you'd like to see more videos like this one, hit the like button. That tells me that I want to see more videos like this one. And if you don't, then don't hit the like button. But either way, I wish you well, and I hope you're staying well in the current situation the country has now. I'm Don Singletary. I hope every day is a payday for you. And thank you.